everybody. This is Lisa with Homes by Ash and Keller Williams Integrity here today to talk to Maria Jondahl with New American Funding. She's a rock star loan officer. She's been in the business for 30 some years, and she just does an amazing job. Hi, Maria.
Hi, Lisa. Thanks for having me.
You're welcome. It's good to see you this morning. I wanted
Thanks.
to talk to you a little bit. Can you tell me a little bit about how long you've been in the business? I saw too that you recently won an award.
Oh, yeah. I've been doing this for 39 years now. Started right
when you were 5.
Yeah. So right out of high school. Got into it and stayed in it, just loved it and worked my way through from processing to underwriting and then originating. And I've been doing that since I've been 22. So it's been a long time.
Good for you.
Long time. Love it though.
Tell me about your award that you just won. And again.
Yeah. So everyone, we have an institutional awards for like President's Club within each company. So I've received that again. And then we have the Scotsman's Guide, which when you're in the 1%, top 1% of the loan originators nationwide, you get on that. So yeah, got that this year again, which is awesome.
Well, Maria, you've been in the business a long time, and that's a huge benefit for our clients because there's so many loan officers that come and go in the business or can't make it, or things get tough. They don't know how to work through it and how to pivot and help clients. Can you tell us a little bit more about your background in that way?
So because I've been doing it so long and because I started from the ground up, from processing and underwriting and doing the background stuff, I can get into a file and know what they're thinking, how to structure deals. I can see things up front that might be an issue so that we can get it through in different departments. And it's ever changing, since 2008, the crash. We've had so many new regulations changing, documentation. It's so important, to have the knowledge, and every file is different and has its complexities because every borrower is different. And so I think that's really helped me in the industry. A lot of people say, oh my gosh, if you've got a tough deal, Maria can get it done. If there's a way to get it done, she can get it done.
There's so much truth in that, Maria. There's so many times where people have brought, let me correct myself here, where I've been on the representing a seller and the buyer's loan has fallen apart. And of course, my seller's devastated. So I talk to the other lender or other realtor and ask if they'll consider moving the file and talking to you. And they do. And you have always gotten it done.
Yeah,
you're amazing.
That's the best part about the job is when you can do that, because the customer's so excited. Mm-hmm. They're just so grateful and they can see what you do. That's the best part of our job.
Yeah. So the big question I've been having lately from clients, potential buyers, right? Ones that are just starting the home search, some that have been maybe looking for a while, is what's going on with the interest rates, right? Why are they jumping up? And what should they wait it out? Maybe come next year or whenever for rates to come back down. Can you address that?
Well, I sure can. It's so we've just gotten out of 2 years of COVID and everybody's starting to go out to restaurants and doing things. And now that we have come out of that, the economy was so flushed with money during that period. Interest rates dropped so low for two years, basically. I mean, never seen rates in the 2s and 3s. everyone got used to that. They flooded us with refinances. They were out buying like crazy. So now we get into this year, 2022, and we have seen rates go up from March to now a full 2% higher in interest rates. So we've
That's
gone
huge.
from the
That's a
threes.
huge change.
Yep, the threes to the fives, and people are shocked. They're just like, oh my gosh. And it happened so fast. Historically, it's never happened that fast before. So we're just trying to get people used to understanding what's going on with the flood in the market of all that money. And now we have inflation on so many different things: food, housing, rent, gas. We're seeing it everywhere. And so the only way that we can fight inflation is to raise interest rates. And so we're going to see that at the next couple of meetings. We just had a meeting in May where they raised the Fed discount rate. So we expect that to happen.
So Maria, just for our clients and stuff that are listening, so when they raise the Fed discount rate, how does that compute to their mortgage rate?
Okay, so they're not correlated hand in hand. When the Fed raises the discount to fight inflation to bring that down, typically money will flow into bonds, which set interest rates. Yep. So then we'll start to see our interest rates come down a little bit. People think when they raise the Fed discount rate, that means interest rates are going up. No, it's not that way. The Fed discount rate is like borrowing on car loans and bank loans and personal loans, stuff like that, or the money that the bank pays to lend out. So typically it's the opposite, right? We see the Fed funds discount rate go up. We see interest rates come down. Yeah, we're in something right now in this market where they're both being hammered. So we're not seeing the decrease in interest rates when the Fed just raised the discount to 0.5 point, because there's still so much money and there's still so much demand in housing, which brings us to another point. You hear a lot about, we always get customers that are saying, oh, it's a bad time to buy. Interest rates are going up. I'm going to wait. We're going to have a housing bubble, right? We've got a housing bubble. Yeah. Well, that's not what's happening. The supply and demand is causing housing to be stable. We're seeing because we have so few homes. Yeah. And that's what's and so many buyers chasing those homes. Yeah. That's what's continuing to keep our prices strong. And we were behind on building, right? Yeah. We, from 2008 to COVID, at least 12 or 13. Yeah. Yeah. Oh yeah. Yeah. So housing is going to be fine. We're going to start leveling off. We're not going to see 20% increases in value. We might by the end of the year in Minnesota see 5%, right? It'll come back to a level. People say 4 to 5% is a pretty balanced market, as far as appreciation values go. Yeah. And it's a heck of a lot better than renting, because rents have gone up this year in Minnesota, 18%. Wow. So that is huge. So people should always call and see, what do I qualify? Can I buy? And what would my price range be versus actually renting? Yeah. And I think for you, Lisa, aren't you seeing less offers on that same home in the market? So instead of getting 30 offers, which was crazy, right? Right. We're seeing 10, 12. That's still crazy. I mean, it's still really great for the sellers. It is. Okay. Yeah. I just heard one at 325 over the weekend, had 8 offers. Yeah. So, much more manageable. Right. Right. For everybody.
I want to, if you don't mind, switch gears to two other things. A lot of our clients may not know that you do. One of them is a VA loan. If you could just really short, just speak to that a little bit.
Yes, that VA loans are the best loan in the industry, right? It's zero down. If you're disabled, you don't have to pay a VA funding fee, which is financed anyway. It is one of the best programs for our veterans out there. You don't pay mortgage insurance. We do a ton of VAs. And we even do manual underwrites on VAs. So if we don't get an automated approval, or if they've got a super low credit score, we can still manually underwrite that.
Awesome.
Which it is by far the best program.
Another program you have, I'd like you to talk about, and it's been a lifesaver for some of our clients, because it's where they have a home to sell and they don't want to sell it and be homeless, right? And they can't get an offer contingent on the sale of their house because no one's looking at them, because there's so many other offers not contingent. And I think you call it BAP for, Yep.
So it's called the Buyer Accepted Program.
Mm-hmm.
And yes, I think I have about 9 right now going in my pipeline, because they do have that backup house to sell. Again, like you said, that you can't go contingent in this market, otherwise they're going to lose.
Right.
Meaning and they can't sell it because they have nowhere to go.
Right.
So New American Funding is using our own money. We are going in and we are purchasing, being the buyer of the house that they want to make an offer on. And we can close in as little as 2 weeks. So we go in and purchase it cash. The real estate agent and the buyer have to go through the approval process, which you and I closed one already.
Yeah.
Which is phenomenal. And so yeah, they're taking cash offers, and we wanted to be innovative, be ahead of it. And no one has a program like we do, where we literally come in and buy it for cash.
So what happened with our clients is that New American Funding, through this program, purchased the house. Our clients were able to move to that house, the new house, turn around, go back to the house. They had, really big dogs, and they had a lot of work they needed to get done. And they were able to go back over, I think it was like a 2-week period, and not only move and clean and paint and do some repairs, and just got it perfect, and then get it on the market. And it helps so much, because then you don't have to restrict showings because they have to move the dogs out, or if somebody's working from home. And yeah, it was wonderful. And then you guys closed on the purchase with your program.
Yes. Yeah.
And you closed a second time when you sold it from New American Funding to our client.
Right. So the client then, after they sell their home, which, like you said, they can move into the new property and then they just pay rent, right?
That's great.
Until you sell the other home. And then they purchase it from us.
Yeah.
And there's no duplicate fees there, because we have the title company hold the title open, so we can close one after the other. So it works out great. They only need as little as 3% down, right?
Yeah.
Which typically they will give that for the earnest money, and we can go down to a 620 credit score. So
I didn't know that. Okay.
Yeah. So they changed that. We can go down to a 620 credit score, which helps more homeowners. And if you're doing a 3% down conventional, it's perfect. Yeah.
It was so smooth. Yeah. They loved it.
Yeah. So if anybody has, I think everyone right now in the marketplace should be going through that. And we get everything approved up front. We put everything into underwriting, so they already know right up front before you're running around making offers with them. They're approved for that, and you can submit the cash.
And the buyer still has control, because they still get to decide what price they want to offer, right?
Oh yeah.
And they get to decide, do they want it contingent on inspection or not? If there's well and septic, do they want it contingent on those being tested and certified and that kind of stuff?
Yep.
So they're still in control. They get to decide, oh, I want to ask for that dog kennel as part of the personal property or
Yes.
not. BAP's not saying to them, they have to do it this way. And
correct. We will honor whatever they want to do for that particular offer, whatever the buyer wants and you write, we're going to go ahead and look at that and go ahead and sign off on it.
yeah. Say, do me a favor, pull out your crystal ball.
Okay.
And tell me what you think is going to happen with rates over the next 6 months.
Wow.
Wow.
Oh my gosh. Okay. So interesting because we had a conference call this morning and we were just talking about, now we've the New York manufacturing numbers came out this morning. They thought that we would have a 1.7% increase in that. It was a negative 11.7. So not even that was such a major miss, right? Now that's one state, and more will come out. So we think we will go ahead and see 2 more Fed half-point increases. That would get us to August. Then we start seeing all the unemployment numbers increasing. We've already seen the last 2 months now that wages are starting to be pushed down. So if the economy starts to fumble, right, we start seeing negativity across the board. We think by August, they're going to have to stop.
Stop raising the discount rate.
Yep. Stop raising the Fed discount rate and start with a different plan. We all have agreed inflation's gotten so high that the Fed should have come back in February and March and did something earlier so that we didn't have such a high, it didn't get so hot, right? So no matter what, and you're hearing a lot of talk of recession, and it's all going to be dependent on what the Fed does. But here's the good news for our buyers, right?
All right, give it to me, baby.
Let's say that in August they stop raising it because the economy is getting worse, that we're having job layoffs and or wage pressures going down. And let's just say by year end, we do go into recession. Out of the last 8 recessions we've had, and I've been doing this 39 years, there's only one time that interest rates didn't decrease substantially right after a recession. So when people say to me, where do you think rates are going to go? I say, okay, if we take a look at the last 25 years of interest rates, we've averaged about 6.5%.
And we're still way under that.
We're still way under that. Rates are still phenomenal. Everyone's got to get out of their head, you know, the 2s and 3s. That was an oxymoron. That, you know, bless you if you got that. And you know what? We're still lower than 6.5. And if things do continue to get worse towards the end of the year, they'll have to push those back down, back into those 4s again. Yeah. So then we refinance.
Yep.
You know, great opportunity to refinance during that time.
Yeah.
So that's where we think it's, and don't hold me to that. But I love talking about that end of it. I just listen to that stuff daily. I watch the economy. I watch what's going on with crypto.
Maria, it's only one of the many things that make you so great at your job. I have appreciated working with you for many years. Our clients are thrilled when they work with us as a team.
Yeah,
and,
so cool.
I'm so grateful for that. And thank you. Thank you.
Yes, thank you, Doll. I think we've been together a long time, and
I know.
Cheers to many, many more.